The history of money, from barter to digital payments, Part 1. Money is one of the most important inventions in human history. We use it every day to buy goods, pay bills, travel, save, and invest. It connects people, businesses, and nations through trade. But money has not always existed in its current form. Long before coins, paper currency, or digital payments, people relied on simpler systems to exchange goods. The evolution of money reflects the growth of human civilization, with each stage solving problems and enabling progress. Thousands of years ago, people used barter. In this system, goods and services were exchanged directly. A farmer might trade wheat for shoes, or a fisherman might exchange fish for vegetables. While barter worked in small communities, it had major limitations. The biggest issue was the double coincidence of wants, meaning both parties had to want what the other offered at the same time. It was also difficult to determine fair value, and many goods were hard to transport or store. As societies grew, barter became inefficient. To solve these problems, people began using commodity money, items that had value and were widely accepted. Different regions used different commodities such as salt, cowrie shells, tea, tobacco, or livestock. These items were useful and recognizable, making trade easier. However, they still had drawbacks. Some were bulky, perishable, or inconsistent in quality, which made trade less reliable. Eventually, precious metals like gold and silver became the preferred form of money. They were durable, portable, divisible, and scarce, making them ideal for trade. Their consistent value and resistance to decay made them widely trusted across civilizations. As trade expanded, governments began minting coins from these metals. Coins had standardized weight and purity, marked with official symbols to guarantee authenticity. This made transactions faster and more reliable. Coins spread across regions, boosting trade, supporting taxation, and helping economies grow. For centuries, coins remained the dominant form of currency. However, carrying large amounts of metal was risky and inconvenient. To solve this, ancient China introduced paper money. Merchants deposited their metals with trusted institutions and received paper certificates in return. These certificates could be exchanged for the stored value. Over time, governments began issuing official banknotes. Paper money was lighter, easier to carry, and more practical for large transactions. This marked a major shift. Money's value began to depend more on trust than on physical materials. As economies grew, banks became essential. People deposited money for safekeeping, and banks provided services like loans, transfers, and savings accounts. Banks also lent money to businesses, helping them expand, create jobs, and drive economic growth. Money was no longer just stored, it became a tool for development. For many years, currencies were tied to gold through the gold standard. Each banknote represented a fixed amount of gold, ensuring stability in trade and exchange rates. However, during wars and economic crises, governments needed more flexibility and often printed more money than their gold reserves allowed. Eventually, most countries abandoned the gold standard. Today, we use fiat money, currency that has value because governments declare it legal tender and people trust it. This trust is the foundation of modern financial systems and sets the stage for the next phase in the evolution of money. The history of money, from barter to digital payments, Part 2. As the 20th century progressed, technology transformed the financial world once again. Although paper money remained the primary method of payment, people wanted faster, safer, and more convenient ways to buy goods and services. Carrying large amounts of cash was not always practical, especially during travel or expensive purchases. This need led to one of the biggest innovations in modern finance, the credit card. Credit cards changed the way people spent money. Instead of paying immediately with cash, customers could purchase goods and services using money borrowed from a bank and repay it later. This simple idea revolutionized shopping by giving consumers greater flexibility while helping businesses increase sales. People could make purchases even if they did not have enough cash at that moment. Credit cards quickly became popular around the world. Restaurants, hotels, supermarkets, airlines, and retail stores accepted them as payment. Travelers no longer needed to carry large amounts of cash or foreign currency. Banks introduced electronic payment processing, allowing transactions to be approved within seconds. Over time, security features such as magnetic stripes, EMV chips, PIN numbers, and contactless technology made card payments faster and more secure. Credit cards laid the foundation for today's digital payment systems. Another breakthrough came with the invention of the automated teller machine, or ATM. Before ATMs, customers had to visit bank branches during business hours to withdraw money or perform basic banking tasks. Long queues and limited working hours often caused inconvenience. ATMs transformed banking by allowing customers to withdraw cash anytime using a bank card and secure PIN. As technology improved, ATMs also enabled customers to check account balances, transfer funds, deposit cash, and print mini statements. Banking became available 24 hours a day, 7 days a week. Millions of people enjoyed greater convenience, while banks served more customers efficiently. The ATM became one of the most recognizable symbols of modern banking. The arrival of the internet created another financial revolution. Banks realized customers wanted to manage their money without visiting branches or ATMs. Online banking made this possible by allowing people to access their accounts from computers connected to the internet. Customers could pay utility bills, transfer money instantly, monitor account balances, apply for loans, manage investments, open deposits, and download account statements from home. Financial services became faster, easier, and more convenient than ever before. However, online banking also introduced new security risks. Cybercriminals attempted to steal passwords and financial information through hacking, phishing, and fraud. Banks responded by investing heavily in cybersecurity. Encryption, secure servers, multi-factor authentication, biometric verification, fraud detection systems, and real-time monitoring became essential for protecting customer accounts. Today, cybersecurity remains one of the most important parts of digital banking. The next transformation came with smartphones. Mobile banking apps placed an entire bank inside every person's pocket. With just a few taps, users could send money, pay electricity bills, shop online, buy groceries, recharge mobile phones, book travel tickets, and invest in financial products. Banking became available anytime and almost anywhere. Countries around the world embraced digital payments, but India became one of the global leaders. The introduction of the Unified Payments Interface, or UPI, revolutionized digital transactions by allowing instant bank-to-bank transfers through smartphones. Street vendors, supermarkets, restaurants, taxi drivers, and small businesses rapidly adopted QR code payments. Millions of transactions that once required cash could now be completed within seconds. India's success demonstrated how technology can make financial services faster, cheaper, and more accessible. Digital payments offer many advantages. They are fast, secure, convenient, available 24 hours a day, and reduce the need to carry physical cash. Electronic records also improve transparency and simplify financial management for individuals and businesses. In 2009, another major innovation appeared with the launch of cryptocurrency. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized computer networks using blockchain technology. Blockchain is a digital ledger that securely records every transaction across thousands of computers. Because no single authority controls the network, supporters believe blockchain offers greater transparency and financial independence. The first and most famous cryptocurrency is Bitcoin. Since then, thousands of cryptocurrencies have been created. Supporters believe they enable borderless transactions, lower transfer costs, faster international payments, and greater financial freedom. However, cryptocurrencies also face important challenges. Prices are highly volatile, regulations continue evolving, security threats remain a concern, and blockchain networks must improve their speed and scalability. Governments around the world continue studying how cryptocurrencies should fit into modern financial systems. Recognizing the importance of digital finance, many governments are developing central bank digital currencies, or CBDCs. Unlike cryptocurrencies, CBDCs are issued directly by central banks and represent official national currencies in digital form. They combine the convenience of digital payments with the stability of government-backed money. Several countries are already testing digital versions of their currencies. CBDCs could improve payment efficiency, lower transaction costs, strengthen financial inclusion, and provide secure alternatives to physical cash. Many experts believe they will become an important part of the future global financial system. From credit cards and ATMs to online banking, mobile payments, cryptocurrencies, and CBDCs, money continues evolving with technology. Every innovation makes financial systems faster, smarter, and more connected. Yet this remarkable journey is still far from over, and the next chapter in the history of money is only beginning. The history of money, from barter to digital payments, Part 3. Throughout history, money has continuously evolved. Every major advancement in civilization has changed the way people exchange value. From barter and commodity money to coins, paper currency, banks, credit cards, and digital payments, each innovation solved problems and made trade more efficient. Today, we are entering another financial revolution driven by technology. The future of money promises to be faster, smarter, more secure, and more connected than ever before. One of the biggest innovations shaping finance is artificial intelligence. AI is already helping people manage their money by tracking spending, creating budgets, identifying unnecessary expenses, and suggesting ways to save. Some financial apps even recommend investments based on a person's goals and risk tolerance. In the future, AI could become everyone's personal financial assistant. It may remind users to pay bills, detect fraudulent transactions instantly, calculate taxes, compare insurance plans, and recommend better investment opportunities. As AI becomes more advanced, managing personal finances will become easier, more accurate, and highly personalized. Another important innovation is biometric authentication. For decades, people relied on passwords, PIN numbers, and signatures to access their money. However, these methods can be forgotten, stolen, or copied. Biometric technology replaces passwords with unique physical characteristics such as fingerprints, facial recognition, iris scans, or voice recognition. Many smartphones already allow users to approve payments simply by scanning their fingerprint or face. In the coming years, biometric payments are expected to become even more common because they offer greater security while making transactions faster and more convenient. Digital wallets are also changing the way people carry money. Instead of carrying cash, bank cards, and paper documents, many people now store everything on their smartphones. Digital wallets can hold payment cards, tickets, boarding passes, loyalty cards, identification documents, and even digital currencies. As technology continues improving, physical wallets may gradually disappear for many people. A single smartphone could become the center of an individual's entire financial life, allowing secure access to banking, shopping, transportation, healthcare, and government services. International money transfers are also becoming faster. Today, sending money across countries often involves multiple banks, processing delays, and service fees. Future payment systems may complete international transfers within seconds at much lower costs. This will make global business easier and help families send money across borders more efficiently. Another exciting development is the use of smart contracts. These are digital agreements stored on blockchain networks that automatically execute when specific conditions are met. Unlike traditional contracts that require intermediaries, smart contracts can process transactions automatically. For example, insurance claims could be paid immediately after verification, property ownership could transfer automatically after payment, and businesses could automate supplier payments without lengthy paperwork. Smart contracts have the potential to make financial transactions faster, more transparent, and more reliable. The future of money also includes greater financial inclusion. Millions of people around the world still do not have access to traditional banking services. Without bank accounts, it is difficult to save money securely, receive loans, or participate fully in the economy. Mobile banking, digital payment platforms, and central bank digital currencies can help solve this problem. With only a smartphone and internet connection, people in remote areas can access financial services that were once available only in cities. This creates opportunities for education, entrepreneurship, employment, and economic growth. However, every technological advancement also creates new challenges. As financial systems become increasingly digital, cybersecurity becomes more important than ever. Banks, governments, businesses, and individuals must work together to protect financial information from hackers and cybercriminals. Strong encryption, fraud detection systems, artificial intelligence, and continuous security improvements will play an essential role in protecting digital transactions. Privacy is another important concern. People want fast and convenient digital payments, but they also expect their financial information to remain safe and confidential. The challenge for future financial systems will be balancing innovation, security, transparency, and personal privacy. Looking back over thousands of years, one clear pattern emerges. Every stage of monetary evolution solved a major problem. Barter allowed early trade, but was inefficient. Commodity money introduced commonly accepted value. Gold and silver provided durability and scarcity. Coins standardized trade. Paper money improved portability. Banks accelerated economic growth. Credit cards increased purchasing power. ATMs provided 24-hour banking. Online banking connected financial services to the internet. Mobile payments placed banks inside our pockets. Cryptocurrencies introduced decentralized finance, while central bank digital currencies combine digital convenience with government-backed stability. Although money has changed dramatically throughout history, one thing has never changed. Money works because people trust it. Whether it is shells, gold, paper notes, plastic cards, smartphones, or digital currencies, none of these systems would function without public confidence. Trust remains the true foundation of every financial system. The history of money is ultimately the history of human progress. It shows how innovation has continually improved trade, strengthened economies, and connected billions of people around the world. Every generation has built upon the achievements of the previous one, creating faster, safer, and more efficient financial systems. The next time you tap your phone, scan a QR code, swipe a card, or transfer money online, remember that you are part of a journey that began thousands of years ago, when two people simply exchanged goods through barter. The story of money is still being written, and the future promises even greater innovation than we can imagine. Thank you for watching. If you enjoyed this documentary, please like this video, subscribe to the channel, and turn on notifications.